Yeah. So good morning, all. This is Vasant here from the Fundamental Research team. So starting with the U.S. markets. So last night we witnessed that U.S. markets were under pressure across indices. That's largely because Fed's minutes were announced for the meeting which was held last month. And it was observed that almost all the members of the Fed were in a opinion that raising the rates was required, and inflation continues to be the biggest risk for the markets. And considering that the hawkish view of the Fed members, the yields also remained higher in the US. So that spooked the markets yesterday. What we have observed is that the August month, the US markets has been on the weak trajectory. That's largely because after a strong run-up seen in the previous months, the market is now concerned with, of course, the hawkishness of the Fed, the rise in yields, the China economic concerns, as well as the Fitch downgrading the US banks, and still indicating that it will downward further. So all these factors are affecting the markets globally and the US. Domestic markets are also getting impacted because of this, as this impacts the FII flows in the domestic markets. While they have been very strong till last month, but we have witnessed FII selling for last few days or few weeks. So that's because of the problem in their home markets. So, but overall, what we are also seeing is that the domestic market is witnessing a very sharp recovery whenever it witnesses a fall. So we believe that, overall, considering the earnings, the result season, the expected earnings going ahead, the domestic market remains, the Indian market continues to remain as a buy on dips market, especially for the quality large cap ideas. One should continue to look for whenever there is a decline in those ideas. In terms of stock ideas, in terms of reports, so Institute came out with a initiation report on the hotel sector. So basically, they have a buy rating and a preferred picks on chalet hotels and lemon tree among the hotel segment. The thesis being that after the strong quarter of the strong year FY23, the hospitality sector continues to remain positive as the demand trajectory continues to be strong, especially the domestic demand and the revival of the inbound tourism. Further, these future events such as G20 Summit and ICC Cricket World Cup in India is also remains positive for the hotel sector. Further, the demand for the hotel rooms is expected to grow at 8 to 10%, versus the room supply growth is just 5 to 6%. Hence, it is expected that there could be higher occupancy levels going ahead, and the ARR, that is the average room rates growth, is expected to be 8 to 10% for next 3 to 4 years. So, for most of the players of the hotel industry, the revenue growth between 12.5% to 21% is expected, whereas EBITDA growth is expected to be higher at 16% to 31% for various players between FY23 to FY26. Also, in terms of the balance sheet, they are not much leveraged, and in fact, going ahead, they are expected to be cash flow positive over next 2 to 3 years. So valuations are currently at around 18 to 22 times FY25 EV by EBITDA seems reasonable for the hotel stocks, and given the favorable demand outlook, and hence the Institute team has a buy rating on stocks such as Chalet Hotels and Lemon Tree. While the result season is over, Kirloskar Oil Engines results had come up. The numbers were quite decent. They came up with in line with our estimate, in line with the estimates. The sales stood at around 1,270 crores, which was up 33% on a YY basis. The EBITDA was up 48%, while EBITDA margin stood at 12%, which was also an improvement on a quarter-on-quarter as well as YY basis. Overall, the demand drivers for the companies continues to remain the demand from the infrastructure segments, pricing growth, and great focus on the exports and the aftermarket sales. Kirloskar Oil Engines is very strong on the R&D side, and that open up export opportunities for the company too. So over next 2 to 3 years, sales CAGR of 16% and EPS CAGR of 23% is expected. So Enhanced Institute team has maintained a buy rating on the stock with a target price of rupees 580 for Kirloskar Oil Engines. Uh, In terms of stocks in news, so IRFC stock would be in focus as government is looking to sell the stake via OFS. Currently, it has 86% stake, and as per news articles, it is expected to sell around 11% stake. So that stock could be in focus. Yesterday the government announced like around 57,000 outlay for electric buses across the country. So that's positive for auto stocks such as Tata Motors, Ashok Leyland, Olectra Electric, and JBM Auto. Ashok Leyland continues to be our preferred pick and is our official call, which is open. In terms of the actionables, over the last week we have given calls on. Yesterday we came out with a stock idea on L&T Finance. We have been positive on L&T Finance for quite some time. We believe that the retail assets, which now form 82%, the management has stated that they would want to scale the retail portfolio to around 90% levels of the overall lending book by FY26 by focusing on segments such as consumer loans, rural micro loans, and home loans. The NIMs are expected to improve further from 8.1% levels currently. Asset quality is also, which has improved, and it is also expected to further improve going ahead. There is a new CEO at helm for L&T Finance. They have been able to raise funds at regular intervals. So overall, we believe that there is still a lot of steam left in L&T Finance, and at current market price of around 120, 122 levels, we believe it's a good buy for a 20-25% upside over a 2-quarter time frame. Further, I would like to highlight that last week we had initiated call on Shriram Finance. We continue to be positive and have a strong conviction buy on Shriram Finance over the next 2 to 3 quarters. We believe that Shriram Finance, being the best player in the used CV finance, which is a high yielding portfolio and improving fundamentals, is a good buy. Also, the valuations is very cheap versus the Chola or the M&M Finance. So one should look into L&T Finance and Shriram Finance as the mid cap idea in the NBFC space. Other stocks on which we have an open call and continue to remain positive are Shah Metallics, Ashok Leyland, and mid cap bank ideas such as Federal Bank, DCB, and Bank of Baroda. So that's it from my side. I hand over for the update.
Good morning, all. This is Akshay from the Technicals and Derivatives Desk. Well, one thing is pretty evident going by the levels in the Nifty. 19,300 stands out as a clear support zone and 19,600 as the resistance zone. So unless and until you have a breach of either of the levels on the downside or on the upside, you wouldn't see a direction setting up in the Nifty index. As we closed yesterday, again, that was the second day where the market did show off an intention of buying around the 19,300, 320 odd mark. If you look at the data flow in the indices, broadly there has been selling in the cash segment with selling also in the index options and the futures segment. So broadly that piece of data is not very encouraging. The long short ratio has slipped in the August series to around 39%. That's 39 longs in the system, which is not a good indication as the broader trend goes. We need at least a long short ratio of about 50% to at least conclude that the market is trying to stabilize. Another indication which goes from the derivatives data is the India VIX, which is the volatility index. Lately, if you see, the volatility index has picked up and it closed around the 12% levels yesterday. So a pickup in volatility index doesn't bode well for the market. It just indicates that there is some bit of nervousness which is creeping back in the system. That's the reason why you have a pickup in the VIX. And probably this is seen as a caution as far as the short-term proceedings go. So going by the data front, today being the weekly expiry for the Nifty and the Bank Nifty, the positioning in the options data for today's weekly expiry stands at the 19,300 strike in put and the 19,600 strike in call in terms of the writing interest. However, by the closing hours of trade yesterday, we did see a significant chunk of put writing shifting to the 19,400 strike. So the first half an hour of trade would clear off as to how the data would play out in the indices. Any strengthening of the index above 19,400 just would be an indication that the Nifty should hold on to the gains which it presented in yesterday's trading. Our broader view is that it might be a range bound session. The range being the trading range rather on terms of the price action would be 19,350 on the lower end and 19,500 on the upper end. Only if we manage to break past 19,530 basis spot Nifty, that would be the first sign of indication that the market is trying to improve and possibly aim for the upper end of the resistance, which is the 19,600 or 650 zone. Till then, the trading strategy for theta scalpers in intraday trades would be you try to sell around the 19,500 area for intraday trades, try to buy around the 19,350 odd zone in case of dips, and keep on scalping within this range as far as the weekly expiry goes. Because our belief is 19,500 is an important resistance as far as the weekly expiry goes. Moving on to the bank index. Bank index has been a laggard lately in the way the data and also the price action is seen. On the technical front, possible head and shoulder development is seen on the banking index, which is a bearish indication from a positional perspective. 44,000 stands to be a very crucial level for the banking index, considering the fact that even the technical supports as well as the options data has significant writing bets concentrated at the 44,000 strike, especially on the weekly expiry day. You have a lot of presence of both calls and puts at around 44,000 strike, which indicates that a 300 odd point swing is possible either ways from the given zone. Broadly, the short-term supports, which works out for Bank Nifty, is the level of 43,400. That's an important level to keep an eye on as far as the short-term proceedings go. And on the upside, the resistance stands around 44,500. In case we were to talk about any reversal in Bank Nifty on the bullish front, it is the level is pretty far off. The level is above 45,000. So unless and until we manage to cross those levels, the caution or the danger signals continue to be on in the bank index from a slightly positional perspective. Now, moving on to the stock-specific action here, what we understand that majority of the sectors have seen a beating in the recent trading history, especially led by the banks, which has seen a lot of long liquidation. So banking, in case of any weakness, banking would be the first candidates to go short on in this market from a trading bet. As far as the long additions go in yesterday's trade, we did see some bit of the longs in the auto space and also in the power sector. Buy calls which are open from our desk, which I believe should do well for the short term. Maybe Tata Motors, where we have recommended a covered call strategy. Citla, where we have full call spread open, which indicates that we are possibly targeting the upper end in Citla. And Ashok Leyland in the auto space also should do well, where we can target around 200 for the August series. So these are the trade recommendations and the actionables from the desk. I would request the next speaker to take it over from here. Thank you.
Thank you, Akshay. Good morning, all. That is set for the currency and commodity update. As per the Fed monetary policy meeting minutes, the Fed officials remain hawkish on the further rate hikes. The market sentiment dampened after the Fed says that it has no choice but to keep up the interest rate hike until there is an convinced that inflationary expectation is under control. As a result, we had seen a bounce back in the dollar index as it rose to the 2 months high, while the 10-year bond yield also surged to 16 years high to 4.3%. UK July inflation came at 6.8% against the expectation of 6.7%. Overall, the sentiments are in favor of the dollar, and the dollar index is expected to continue the positive momentum towards 105 levels in coming days, while the support is placed at 102.50 levels. Move up to around 23 paisa, but we are holding the positions, and in fact, I recommend that if it comes near 15, 16 paisa in today's trading day, then that would be again a good entry point for that call option. It's a hero zero call considering the breakout in the USD INR. So stop loss is Brent had corrected by over 2% on concern of the economic Chinese economy and possibility of tightener U.S. monetary policy. Inventory was also mixed yesterday. Crude oil future fell by over 3% and form a strong red candle on the daily chart. Globally, the Brent prices has turned downward from its crucial resistance zone, which doesn't bode well for the bulls. Now, on MCX, if the crude oil September future sustains below 6650, then a further dip is possible up to around 6500. On the upside, resistance is placed at 6850 to 6900. Gold also fell below $1,900 as the minutes came. Uh, Gold future ended with a loss of around 0.5% yesterday. Right now, support is placed at 58,300 and resistance is at 59,000. View is sideways to negative for the gold futures. Silver future ended with a loss of 1/3%. It is hovering around its very crucial support levels. Thus, buying on dips is advisable with a stop loss below 69,000 for a move up to around 70,500 to 71,200. So, as far as the actionables goes, one can buy the silver on dips up to around 69,500, 600 tone with a stop loss below 69,000. And for the USD INR, one can in fact look to buy 83.25 call option of the monthly expiry in the zone of 15 to 16 paisa. So that's it from the currency and commodity side. Now we are open for Q&A.